In this video, we're going to talk about Lyft, and according to the monthly chart, price did pull back, and thus the charts are suggesting one can go long now. Now, before we look at the price action on the weekly and the daily chart to potentially find a sniper entry, let's look at this article. Why Lyft stock could go into overdrive in 2025. So Jack Welch, who was once upon a time the CEO at General Electric in the late 20th century, preferred to only target number one and number two companies in any given industry. And as you know, in the ride sharing arena, you have two players. You have the 800 gorilla, Uber, and then you have Lyft. Still, as Lyft makes improvements to improve its platform, the company is now on the verge of profitability. This could mean a long overdue recovery for the stock on the horizon. Now, the key to Lyft's improvements come down to product innovation. For example, nearly half of all rides are commutes to and from work Monday through Friday. For these customers, it offers its price lock plan. For $2.99 per month, users secure a discounted price on regularly scheduled pickups for the month. That is a nice feature and recurring revenue. It allows for savings up to $40 per these customers start to pay the market rate. So far, more than 200,000 customers have signed up for the service, and the company expects that number to grow. Lyft has also increased customer satisfaction with efforts to phase out surging pricing. It has reduced the amount of time impacted by that pricing and paid drivers more for times when they are stuck in traffic. Nice feature for the not employee but contractor. Moreover, the company drives customer engagement through Lyft Media, its in-app ad platform. In addition to keeping Lyft on the minds of customers, it also serves as a revenue source. Now, these ride-sharing companies like Uber and Lyft need to adapt to the ever-changing landscape of autonomous vehicles. And so Lyft has partnered with Mobileye, Nexair, and May Mobility. This could be an intriguing source, and since a considerable portion of its revenue goes to paying drivers, this could be a cost-cutting measure, unfortunately, but more profits in Lyft's wallets. Additionally, analysts forecast revenue growth will slow to 32% this year and 15% next year. Nevertheless, they also predict Lyft will turn profitable next year, and new investors will probably like that the stock price does not appear to reflect this potential. Now, let's talk about valuation. Over the last year, Lyft stock fell by just over 10%, which is still more than 80% below all-time highs from the 2019 IPO. Thus, the price to sales ratio is about 1, and amid the anticipated profit, its forward price to earnings ratio is just 16. If the company's performance matches the forecast, investors may be getting a bargain. All right, so as promised, let's drill down to the weekly chart. You can see price couldn't even get to what was resistance back in March. We got to a high of $19 before price started to collapse. And during this collapse, you could say price did form a weekly sell level. And we're going to analyze this level on the daily chart now. See how much of a roadblock this is going to be. All right. So this is the high that we saw on the weekly chart. Price moves down, consolidates, pushes it back up, and then pushes down. And that volume is on above average volume. And so within this weekly sell level is nested a daily sell level. So the charts are suggesting if you're going to get long, before that, you want to wait for some type of reversal pattern. Now, this yellow, green dotted line, it's saying best levels to get long is going to be below $13. And you want to have targets. You want to have about $17 as a first target and then $20 as a second target. And that would be good for roughly a 4-to-1, 5-to-1 risk reward to risk ratio. Thanks for watching. Subscribe. Please like the video.